Training is not live, right? 4:30. Wait.
ನಾಗೇಶ್ವರ್ ಮರ್ತ್ಬಿಟ್ಟಿದ್ದಾರೆ ಸರ್ ನಿಮ್ಮ ಪಿಲ್ಲೋ ಇದು ಅಂತ ಗೊತ್ತಿರ್ಲಿಲ್ಲ ನನಗೆ ನೀವು ಪಿಲ್ಲೋ ಇಟ್ಟಿದ್ದೀರಾ ಅಂತ ಗೊತ್ತಿರ್ಲಿಲ್ಲ ಸರ್
ನಿಮ್ಮ ಚಾನಲ್ ಇದೆ.
Oh, what is this? What is this? This is for ordinary, right?
Instead of this one here.
Oh, YouTube I have to type here.
No need to type, sir.
No need
Just
to
better
type.
you. If students ask any doubt, you can reply through this like video.
Reply through video,
Video.
not chat.
Not chat only.
Okay.
Open.
What is this one?
Okay. After during break, wait.
No portal, nothing, no?
Nothing.
Visible, sir.
What's this one?
What about keyboard? It's not that. Only class it's central for morning credits. Here I can meet you.
Start, no?
Sir, you can see the comments here.
Then answer.
Answer it, that's it.
Here also they can say, sir, today, then tomorrow we will not keep this one, then we will keep only this new.
This one keep it here. Yes. Live now?
Yes, sir.
Okay.
Recording.
It started, right?
No.
And same thing, intro. In the TV.
Sound we are watching here.
No?
Sound people are watching.
Okay, but here TV. Okay. Okay, done. Okay, hi, good evening, everyone. So this is a special session for all of you who are going for exams now in the coming days in Jan-Feb window. Okay, so we thought at ArivuPro, let's this also value addition for all of you. Okay, so you might have prepared everything now. This session is just like a Q&A session and any doubt clearing sessions because most of you have already prepared. Only thing is you're going for a war battle, and we are here to support you in that mission. Okay, let me just summarize. Today we are going to take section A and possibly section B, like that, in the next 4 days, except 15th. So Monday, Tuesday, Wednesday, and Friday. Okay, Thursday is a holiday, and keeping in view of all those things, now just I'll summarize what is the this is for all, because people are on public live, and just food for thought. Okay, when you go for exams, make sure that some tips are important. Many people will tell you a lot of strategies, but one thing you should keep in mind is that don't go without any documents, etc. That is one biggest problem. Keep your IDs correctly, and when you sit for the exam, when they take you inside, and when you start, questions start coming, how to use the working papers. Many students make a mistake of just scratching something, and maybe you're correct, you clicked the answer and you are moved on, but some questions you will mark it, you'll flag it, and flagged questions you will attempt later on. That is called, it is flagging. But when you flag it in your working papers, make sure that you write that question number and make a one line, or make it rounded. Like for example here, you marked question number 17. Question number 17 you marked it, but number 17 you should mark like this round. Don't just leave it, because when you come back, you have to answer that, and you keep on searching for that question. That is one deadly mistake many students do, and wasting time and getting confused. Where is that question I did? Half I did. Searching that only will take time. Let's say you have marked around 10 questions. Question number 17, question number 42, question number 53. Now, you have done so many things in the worksheets without putting the question number and marking round. It should be clearly visible for all of you. If it is not visible, where is that question number 17? Where is question number 42? You'll be wasting time. By the time exam will move to next section, then you will regret a lot. This tip many people don't tell you. Very, very important things. You should, I am not asking you to organize the entire working, whichever you get correct, whichever you know correctly, you are confident in that, go ahead, click that and move on. Whichever you have some issues, for that in working papers, you need to mark that nicely, so that you will get that easily, and then you can see again half done answer, any calculation mistake, and then this is, take it from me, this will save you a lot of time. Now, many students get nervous because of this, because they have not organized their working paper. Make sure that all of you practice this. The next thing, when we start this section A, part 1 section A, just for all of you, section A is what? External financial reporting. 15 questions will cut, and I don't think, except lease chapter and some revenue chapter, everything, most of the questions will come from for MCQs only. Wholesome essay in this area will not be tested. So if you get some essay questions as part of section A to F, you will get it from revenue standard, and you will get it from lease, and then you will get it from integrated reporting. Integrated reporting, please be careful, heavily asked in the exam as part of, and I keep on telling you, in essay all the questions will not be on one section only. Essays, 2 essays will cover section A to F, and there will be 12 sub questions. We are going to start section A. From section A, essay importance are this area. You can write down as we go through: revenue recognition, then lease, lease and integrated reporting. Integrated reporting. I am sure all of you, last time also I said, I am repeating. ಸ್ವಲ್ಪ ಈ ಕಡೆ ಬಂದ್ಬಿಡಮ್ಮ, ಇಬ್ರು ಈ ಕಡೆ. This is hiding. Okay. So be careful about that, especially lease, revenue, integrated reporting, because these are the three major areas in section A where the essay probability is there. Getting it? Nishant, Tanishka, Varnika, everyone. Okay. Next, just a brief summary of section A. Section A, external financial reporting, 15 questions. And by this time, you might have practiced a lot. I'll take up different set of questions where we can do Q&A and where we can answer. You also participate. Those who are online YouTube, you can send the questions chat box and I'm going to explain that. I'm not going to type the answers because typing the solved answers in YouTube live is really difficult, but I will explain that. Okay. Section A, first area, it is just nobody will ask you preparation of income statement, balance sheet, ruled out. And income statement, other comprehensive income, balance sheet. No questions will be asked from that area. It is just elementary. But be careful, you will get questions on statement of cash flows. Statement of cash flows, that too indirect method of operating cash flows. Direct method will not be asked because that scope is in section B, budgeting, when you do cash budget. Cash budget is heavily asked in section B. That is the reason in section A, direct method of preparation of SOCF, that is statement of cash flows, will not be asked. These are all the things you should keep in mind. Okay. And of course, what I am telling you is with a disclaimer. Me or ArivuPro is not responsible if you depend only on this. Okay. Next, statement of cash flow, statement of changes to equity. In statement of changes to equity, very popular questions will be retained earnings calculations, statement of retained earnings. Retained earnings means what? Beginning balance plus, what is that? Beginning balance plus net income or loss during the period minus dividend paid or payable. You all left another one. What is it? What is another adjustment in retained earnings? Another item will come. No numerical questions, but the format should be, you all told, except one element. What is that? For retrospective cumulative adjustment, we do something. That what is that account is called? It is an element in statement of retained earnings. Prior year adjustments. Prior year adjustments. Okay. Prior year adjustments is one element, but why? What is that prior year adjustment? When we use that in the exam, they will not ask you to calculate all those things. They will give you that. Because prior year adjustment is what? For what item? Retrospective effect of changes in accounting policy. Changes in accounting policy means, example, anyone online? What is accounting policy changes? Varnika, Tanishka, everyone. Inventory valuation, initial measurement, FIFO to LIFO, etc. Next, another example. Another accounting policy, depreciation. change in depreciation method. All these things is these are what we do technically. There is a cumulative effect we do. Then the debit or credit will be passed in prior year adjustment. No calculations will be asked in the exam, but the knowledge of it is very, very important. So just imagine if you are changing one depreciation method, how many depreciation methods are there in US GAAP? Straight line method and double declining balance method and sum of the years digit method and units of production. Yeah, units of production. Straight line method, double declining balance method, sum of the years digit method, and units of production method, also known as activity method. Now, if management has to change one method, any of this, when they change this, yes, they can. Management is responsible for changing any depreciation method, any inventory policy. They can, but they should think about, if I have changed this, I want to change now in the 6th year, and if I would have changed 5 years ago, right now I am in one particular depreciation. If I want to change it to another depreciation method, had I changed it to 5 years ago, what would have been the depreciation? Right now I am using one method. What is the depreciation? So difference. The difference, you have to pass an entry to prior year adjustment. I am repeating, no calculations will be asked, but you should not forget this statement of retained earnings. Okay. Then be careful about statement of changes to equity, the impact of those journal entries, especially dividend chapter. What are the types of dividends? Cash dividend, property dividend, stock dividend. In stock dividend, there are small stock dividend and large stock dividend, and also the effect of stock split. Now, this dividend chapter, you will get one question. Generally, the questions will be in multiple choice. The impact of these journal entries, especially what is the difference of journal entries from small stock dividend and large stock dividend?
Percentage which is less than 25%, 25 to 30%.
No, journal entries, yeah, we understood that rule, but journal entry, you pass for small stock dividend one journal entry, and uppick is the difference, correct? Uppick we show it in additional paid in capital, we show it in small stock dividend, and we don't show it in large stock dividend. Large stock dividend is always valued at a par value. Less than 20 to 25% is a small stock dividend, and more than 20 to 25% is a large stock dividend. Simply in the exam, somewhere they will write in the one line. Generally, when we say less than 20, it is 20%. More than 25% means large. But somewhere you have to be careful. Somewhere, if they don't say any percentage, that means they will say anything in that range, they will trouble you. If they say 22%, don't jump to the conclusion. Because options A, B, C, D will be less, more, like that it will be. So somewhere one line you should read, which is that they say treated as small stock dividend, treated as large stock dividend. So this area you need to be careful. Property dividend, they will trouble you a little bit. But up to from statement of changes to cash flow to changes to equity, you will get 2 questions. One question compulsory from that statement of cash flows. and in equity they will trouble you with these ideas. Next, from now, that recognition, measurement, valuation, uh, disclosure principles. As I said, starting only revenue standard, very, very important. Revenue standard, brief. We are talking revenue standard from the at the point of sale and over the period. At the point of sale, 5-step process. What are they?
Identify the contract.
Performance obligations, transaction price,
Allocating.
allocating transaction price, and recognize the revenue. From there, they will ask you questions. Good questions they will be asked. In any step, they will ask you good question. For example, just a second. Just a second. Just a second. I have paused it. The stencil is not working. It's show. Hello. Yeah, this stencil is not working. I'm putting that bell. Nobody is coming. These things are not moving. Okay, we'll take up questions on those things. Revenue standard, and then percentage of completion method, inputs, outputs method. Input methods, generally in the exam, the costs incurred. Costs incurred, actual cost divided by total cost. That means actual plus expected. You need to take cumulative, don't forget that, and then arrive at a cumulative percentage, then yearly percentage, and then you take the questions will be either on revenue recognized in year 3, profit recognized in year 2. Nothing is happening, it's not moving. Just pause it.
So I can close this.
Yeah, and again start. Stuck. Okay, stuck. Internet is okay.
Internet.
If this is okay, this one.
So no,
Just
that is
trouble
really
lot.
fast.
Okay, fine. Okay. Okay, for example, okay, which scenario or scenarios are contracts for revenue recognition purpose? Okay, scenario 1, sale agreement is oral, not written. Scenario 2, both parties can terminate the written contract without penalty until the delivery. 3, customer always paid on time but currently is experiencing significant financial stress and probability of payment is questionable. Which scenarios are there in that 5 steps? First scenario is which step? Which step? Identify the contract, no? Yes. Next. Which step is this one? Scenario 2. Scenario 2 is which step? Step 1 only. Huh? Unilateral right to terminate should not be there. Both parties, if they agree, they can terminate both scenario 1 and scenario 2. Yeah. Scenario 1, 2, we are perfect. What about 3? Transaction price. Actually, even it is not a transaction price at all. If you see in step 1, step 1, we have to make collectability sure, right? Commercial substance should be there. When we sell the goods on credit, we should make collections sure. Customer might have a significant issues. We might have other collectability issues, that is different. But in step 1, we have to make sure there is a collection is correct. We can collect it. We have studied the customer, right? All those things. Commercial substance. If you see again literature, scenario 1, 2, 3 are all recognition of revenue. So answer is D. And by the way, you see the understanding, all these are in step 1 only. But the way they write is little bit confusing. You're all getting confused. Transaction price and all, nothing to do with the transaction price. Scenario 2. Scenario 3, what is it? You made collections were coming, but right now there is some problem. Okay, in step 1, what it is written? Make sure that commercial substance is there. You should make sure collectability is certain. Everything will come in maximum step 1 and step 2. Not transaction price. Okay. Next. All of the following are conditions for recognizing revenue at a point, except which one is not in all steps? Huh? B is a performance obligation. Except except A is the customer has to accept, right? Then only we recognize the revenue, correct? B, when we have transferred the risk and rewards of ownership to the customer, that is also correct. Yeah, we have to pass on the title, right? Very good, Tanishka. Title to the asset transfer to the customer when they pay for the asset in full, not necessary. Payment terms is nothing to do with revenue recognition. Many times I said. D is correct. The entity has an enforceable right to payment. If the payment is not coming, we can enforce. But I will transfer the title only when the customer pay in full. No. Payment terms are nothing to do with revenue recognition. Got it? In many questions we come across. Hmm? See, they may keep on giving you advance payments, right? Hmm? Ah. We will deliver the good only when they pay full? No. Answer is no. We deliver the goods and then we wait for the payment. Hmm. You see, such important things. Very slightly, some terminology changes, question changes. Okay, next. Same question, no? Now, what is the transaction price per unit? Step 3, right? Yes?
Yes, sir.
Go ahead and try. LL company signs a contract with GHY company that will run from March 1 X2 through June 30 X2. Okay, March to June. March 1 to June. March, April, May, June. And it agrees to purchase minimum 100 units. Selling price for the first 100 units is 200 per unit. Selling price between 101 to 200 is 180. And any additional units above 200 will be 160. LAL estimates that there is a 30% chance that they will purchase 100 and 50% chance that they will purchase 200, 20% chance that it will purchase 250. On March 15, GHY purchases 75. Lot of data is there. How?
On between 100 units, they said 200 per unit.
Hmm.
So he had purchased only 75 units.
Hmm.
So 200 per unit.
It is very deterministic. How do you calculate transaction price? Based on expected sale, right?
Of each obligation divided by
I understand, but first we have to minimum is 100, right? And 30% chance 100. First we need to get the units 30. Then 50% they will purchase 200. 50% 100. 20% they will purchase 250. 250 into 20%,
50, sir.
50. Expected sale is
180.
180. Minimum purchase is 100. Yes. Now they have purchased 100 and 200. Okay, but for 180, how much? What is the expected sale? 180 is comes under 101 to 200, right? Yes. Yes. So what's the answer now? They purchased 75 on March 15 and agrees to purchase minimum 100. Lot of issues are there. This is a expected. On March 15. So our season starts from March 1 to June 30. Though they agreed minimum 100, on March 15th they purchased 75. Still the season is there, right? Okay. Now, what we can expect now? 30. So this is expected units and they purchase 75. and we cannot say still the season is there. What's the transaction price now? 30 goes with where? First 300, right? First 100. 30 to 200. How much is that? 6,000. Next 100 into this also 100 units comes in 200, right? 100 into 200. How much? 20,000. Next 50. 50 also comes in 200, right? 10,000. Are we going right? No? 36,000 divided by 180, how much?
200.
Back to 200, right? Okay. So our expectation is 180. They have purchased 75. But what is the transaction price should use for purchase? Now I gave you all the information. Still the season is there. All of you are understanding the question. Minimum guaranteed is 100. March 15th they purchased 75. And these are the expectation. I am giving you all the data. Remember 1 or 2 questions we did like that. So, for example, in the exam, this is one sample demonstrating I'm sample. You get stuck in the exam, right? You want to mark it, right? Let's call it as this question 17. Now you all tried it in the rough book. Yeah, not getting anywhere. What you should do, this is what I said. Put like this and put line like this in the rough book. So when you come back, it's easily visible here. Clear? I'm just demonstrating how you should do. So let's say we have marked this question, we are not getting anywhere. So this is the demonstration I'm doing it. Now don't keep on trying this in the exam. What is this? What is that? Confused. 180, 200. So something we are not getting within 1 minute, 1.5 minute. So this is the technique you should use. Otherwise, you do so many, and also when you do calculations for next question and all, you'll do it here, you'll do it here. Put like this lines. So in the heap of lines, when you put on the side like this, question 17, marked, you put it. So when you open this, you will be able to go there. Otherwise, somewhere you do here, somewhere you do here. In the tension, finding out that question 17 will become problem. Getting it, Moranika, Vishnu? Yes? Yes, Sagar. Any questions, YouTube? Type your questions on chat box. Okay. We'll come back. We'll come back now. Don't get stressed. That is sample questions on revenue. Next. When should revenue from sales be recognized? D is crazy, right?
Yes.
Ah, next.
Performance obligations.
Sorry, sorry.
Performance obligations satisfied.
Yeah. So answer is what about B? That's wrong, no? Huh? Entire amount is collected? No, we just now said. You might have a part payment. You might have advance payment. Uh, hmm.
None of this choice.
Why not A? Is
It is only available.
available. It is only available. Very good show. Available. You kept ready. Not delivered. No? Correct? Not delivered. Delivery is important. Performance obligation is not. So C. Tanishka, Varnika, very good. You see, small sentences, small words will distract. Agashri, okay now. Okay. All of the following statements concerning performance obligations within a contract are true except these negative assertion questions will be lot. Hmm.
Yes.
Yeah.
A is correct.
Yes, sir.
D. Remember that when you take the performance obligations, any immaterial we ignore it. Maybe we identify 5, 6 performance obligations, but anything immaterial you can leave it. Immaterial means what? Threshold. Threshold, either economic threshold or performance threshold. In, update of computer is very immaterial. Apple sends you update regularly. Your phone gets updated. Updation is the performance obligation of the seller till the item is with you. But how much it will cost for them? Nothing. We will put updatedly automatically. Sometimes it keeps on updating you until that item is with you. Until that maybe 10 years also, they keep on sending updates. It doesn't cost them anything. It is not that once they supply goods, they're getting over. It's not a perishable good. FMCG, fast moving consumer goods, electronics. Companies think that that item is with you, but it is theirs. So once they install and give it to you, then further updates, it doesn't cost anything. Tune ups, plus or minus 5%. Companies thinks 2%. A 2% is nothing. Suppose if it costs $500 and the item price is 5 million, it's very immaterial, right? But the performance obligation cost 500, but item value is 5,000. It's 10%, right? 10% is economic threshold. Company thinks that it is material to be considered as a performance. 500 out of 5 million, nothing. So they can leave it. These updates, it doesn't cost them at all. So with electronic media, now it will come. No, sometimes phones will come for automatic updation. It's all nothing. Anyone want to go back to question 17? Any idea now? Shiv? Like in the exam, you have to do like this. After 10-5 questions, you get some idea. Go back. Minimum 100, that fellow is telling, right? 100 into 100 comes in what? 200, right? Yes? $200. Balance 80 you are expecting, right? 80 also comes under 200 only. So basically 200 only. Again, we are coming back. Is this calculation correct? 30% they will purchase 100, 50% they will purchase 200, 20% they will purchase 250. 250 into 20% correct?
15 cents.
Huh?
15 cents.
Correct, no? Any other idea? All we have to do is arrive at this total, divide by this totally, we should get it, and divide by 180. That is the transaction price. Still we are not getting. It will be 200 only, right? Yeah.
Next 80 will be coming.
Okay. Next. Come on, Shiv. Okay. What I write here? 100.
80. 90 divided by
80, where it will come? Next 80. Next 80 will come where?
101 to 2.
101 to 200, right?
Yes.
180. How much?
14,400.
No, total 200 into 100, 20,000, right? 80 into 180,
14,400.
14,400,
34,400.
34,400 divided by 180. Yes, answer is this. First 100, 200, next 80. Very good, you catch it, Shiv. Answer is C. This is exactly in exam you should do. As you go through, you see, now you finish this, right? Erase this, move on.
Even though they are asking for 75, we have to see on probability.
Yes, yes.
We should not consider.
Yeah, because there's a season, no? March 1 to June 30. That fellow told minimum I'll buy 100. On March 15, that fellow purchased 75. But still June 30 we are expecting. Our expectation is 180. So that fellow purchased 75. 75 purchase, that fellow paid how much? 75. For 75, that fellow might have paid 200, right? Yes?
Yes.
Now, is this 200 is your revenue? Answer is no. You should wait.
Season.
Still the season is there until June 30.
So this is the 75. This is the first of 180. First part of
First part of 180. Our expectation is 180. But that fellow promised 100. Purchased 75 only. Right now. March 15th. Still we have to revenue recognition. We should not jump. This 75 into 200, what we should treat it? How much? 15,000? Yes? 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 Assuming that fellow paid you 200, definitely 75 comes in first 100, correct? So, they purchased and you received 15,000. What is the entry on that day, March 15th? As an accountant, what entry will pass? First of all, it is not a sale. For revenue recognition, you should not be in a hurry. You can wait till June 30 is over. What is the journal entry on March 15th?
Cash account.
Cash account to cash to unearned revenue.
they are making an advance payment.
Unearned revenue is advance. Unearned revenue is American term for advance from customer. You should treat it as advance.
We have delivered goods.
We delivered the goods. We received 200. Right? Yes? 100, up to 100. First 100 is 200. Yes? So, that fellow purchased 75. Definitely we might have received 15,000. 15,000 cash has come. Entry is not cash to revenue. Because still the season is there. Under what principle we should not be in a hurry to recognize revenue? Conservatism. We should be hurry in recognizing expenses and future losses, but not revenue and income. So till June 30, you can keep it as unearned revenue. And on June 30, you reverse that unearned revenue to revenue. So on June 30, whatever they purchase, our expectation is 180. Maybe that fellow purchased 250, 280. We don't know. But one thing is for sure,
So this transaction is for the
whole contract.
not only for the 75 units purchase.
Yes. And you see, if you want to pass the revenue entry, assuming that on March 15th you want to pass the entry, not required. Assuming you want to pass the entry, you have to take the 191.11 to pass the entry. What is your revenue now? If you want to pass 75 into 191.11, how much is that?
14,333.
14,330. Okay, now you see, first entry is this one. If you want to, no need. But if you want to, I'm just demonstrating. What entries you should pass now? Unearned revenue, $14,333 to revenue, $14,333. That means there is small amount left, 15,000 minus 14,333. That still remained in your unearned. That you should adjust on June 30. This is what the revenue recognition. No hurry to recognize revenue. Which of the following would not impact the transaction price? Step 3, variable consideration. Enter the variable consideration. Cash discount, rebate, right of return. Yes? No? Transaction price, step 3. Before arriving transaction price, what are the considerations? Volume discount, rebate, product return. This is a discount for paying within a specified time. This is not going to impact.
Product return means
Product return in a specific time. When you buy the goods, they will tell now within 1 week you should return, within 30 days you should return. Company expect 1%, 2% product return. Suppose you are selling 200 pieces at $20. Yeah, transaction price is $4,000. But if you are expecting 1%, you should adjust 1%. 4,000 minus 1%, how much? 3,000. This is your adjustment. A is a discount for paying, not cash discount at the time of transaction price. 3,000. Okay. You can open the book and see what we are discussing. Notes. Open book exam. Getting it? Suppose This discount is not, they're confusing you. Cash discount is also variable consideration. But this discount is for paying. So when you go and purchase it, if they have offered you cash discount, that is a variable consideration. But this discount is for paying. That's not a variable. That is nothing to do with transaction price. Company expects certain return. Next. Which is this step? When you see all these things. In the exam, the moment you see the table, fourth step. What is that? Allocation of transaction price over specified performance obligations. Identified performance obligation. This step is step 4. Step 4 is what? Step $3 divided by step 2 obligations. Now, the product itself is a performance obligation. What is the rule in step 4? What's the rule? Allocation. What is the rule? First rule.
Allocate total price for each.
Okay. For what is the basis you take? This is a transaction price. Step 3. And now we have to allocate. What is the first condition? Allocation basis is observable standalone price. If it is not available, then in this question they are telling adjusted market price or expected cost plus margin. In this question they are going with the adjusted market price. For product 3 it is not available. We have to, it is not available. OSP is not available. We have to take this. For 1 it is available. For 2 it is available. Okay, now our job is to allocate transaction price $4,500 to 1, 2, 3. Basis is OSP 1000, OSP 2200, and AMP 1800. What's the total? Leave zeros. 10 plus 22, 32 plus 50, right? Yes? 4,500 divided by 50. 90? Huh? 90 or 95? 90. 90 into 10, 900. Next, 90 into 22, 1980. Answer is C, D. 90 into 18, 1620, right? Answer is D. Step 4 questions also. All these should be perfect. Application of the learned knowledge. One minute. Tanishka, Nishant, Vishnu. Done. Which of the following is correct concerning performance obligations? Which is correct. Everything looks correct, no? Everything looks correct. Better answer. If you are buying TV from Sony, whose performance obligation we are talking? You pay Sony's, right? Answer is B. From the perspective of seller. Seller has to deliver, seller has to install, seller has to give you warranty. Yes, always step 2 is from the perspective of seller. Single contract can contain multiple obligations. Okay, but better answer. Yeah.
Performance obligation will not be stated in the contract.
Yes. When you sign a software contract, yeah, performance obligations will be there. We will sell you software. You will sell you license separately. We will give you technical assistance. We will, until go live, will be with you. That will be stated.
The not option is
Everything looks correct here, but which is more correct? You will write the contract, but basically when we talk about performance obligations, whose performance obligation? In these questions, you can debate forever, but these questions, as a professional, you should think.
so in step 2 they themselves identification is the word.
Yes, yes. Always from perspective of seller. Buyer has only one obligation. What is that? Payment. Right? When I buy TV from you, you have a performance obligation. When I give you advance for construction of a home, you have a performance obligation to come and construct my building. Right? Yes. In such questions, all are positive, all looks correct in the exam tension. You're all correct. Which is more correct? That is it. All questions are troubling. Don't get anxiety. Huh? Huh? That is why this revision. That is why we plan such things. You will not see any of these questions also in the exam. Any of these questions you will not see. Good questions. Good questions. Okay. Now, another way to recognize revenue is over the long term. Using input method, calculating percentage of work completed. Okay. And you all said percentage of work completed. Actual cost plus cumulative estimated cumulative actual cost, estimated cost, total cost, and actual cost divided by total cost. You will get a cumulative percentage into, you get the yearly one and then calculate. Okay. How much revenue in year one? Hmm? No yearly information here. Okay.
Giving after year,
Huh?
after year one, only they have incurred 70,000. In year one, what is the cost?
Very good question.
They are calculating under 70,000, it's coming at like 100.
100. But how many years this contract? They have not given. Hmm? Contract revenue is 500. Estimate total is 350. Yeah. Cost is 70. We don't know year one estimate.
Total 350, but actually incurred in year one, we don't.
No. After year one or during year one, 70,000 is incurred.
70 divided by 350.
No, the 350 is a total estimation.
Total is
In year one, how much is estimate? We don't know. To the extent we can recover our actual cost, you book the revenue. Because here, year one estimate, the what they have is a total contract, total estimation. This is total estimation. We don't have yearly estimation. We don't have. Yeah. Yes. After year one or during year one thing is that they have spent 70,000.
don't want to.
Yeah, but there is no option 0. Right? What's the another possible answer? After year 1, during year 1, they spent 70. Right? Under US GAAP, what is the things? If that amount is recoverable, you recognize revenue to the extent of costs. Here we cannot. Yearly estimation not available. Total estimation is available. So percentage is not possible to calculate. Is not possible to calculate.
So you know that 70,000 is included in this 50,000.
No, that is estimated project cost. Percentage is not possible to calculate at all. You guys, if you do in the exam, 70 by 350 gone, 20%, right? 20% into 500 and you click Bala sir, answer is wrong. $350 is total, and also we don't know how many years this is. They just given overtime. What maximum we can do? We need not recognize revenue at all, first of all. Is it clear? Year 1 revenue basically is 0. But we don't have option as 0. What is the maximum we can do? Actual cost spent is 70.
So the cost
We have to. There's a rule, no? I have given you notes. It's there. In the notes, it's there. If the percentage is not possible to calculate, Nagashri,
Responsible estimate the performance of a work completed,
Hmm.
then under US GAAP revenue is recognized up to the
cost
dollar
incurred.
amount of actual cost incurred.
I give notes, right? ಅಮ್ಮ ಅದು ನೋಟ್ಸ್ ಬಿಡು, ಈಗ ಎಕ್ಸಾಮ್ ಬಂತೀಗ, ನೀನು ನೋಟ್ಸ್ ತಗೊಳ್ಳೇಬಾರ್ದು ಈಗ. All of you are getting? Nishant, Tanishka, Vishnu. Purposely they trouble you, right? Because we don't know year 1. If year 1, they have given you year 1, maybe this one is year 3, year 2, year 3. Actual cost 70, estimation they have given you. Total estimation they have given 350. But maybe in a year, maybe just we are making some numbers. And in year 2, they might have spent, let's say, 100. So 100 plus 70 in year 2, you should take concept. In 350 total estimation, they might have estimated 250 here, 100 here. Then total you do. Total is 170. And here 170 plus 250, 420.
So if they have 70,000 some estimated sales value, we can use that.
Yes. Because here it's not possible to calculate it all. I'm telling you, the word is after year 1. You can say year 1, no, nothing is incurred. But you don't have ABCD. Easy. Yeah, 500. Both have OSP, right?
Yes, sir.
450, 150 ratio. Whatever it is. What's the answer? P. 375, 125. Okay. If first preference is OSP. Here, what's the revenue in year one? Total contract revenue is okay. 3 years, right?
Yes, sir.
Year 1, 2, 3. Actual costs. Billing schedule, it is nothing to do. Huh? Actual cost is 9 million. And estimated cost is 17 million. No, wait. 10 million in year 1. Okay. 10. Okay. Next, we can do total, right? 9 by 19.
0.4726.
Into 20.8.
9.85.
That is also not that, no? We can only go with the rounded off 10.
But directly we can consider that 10 million expected in year one. Surely
No, estimated cost that is. This is estimated cost. Okay, 1 minute, 1 minute. Let's not jump. Estimation. Okay. Year 2 they have not given, no? Actual cost. Yeah. Year 2 they are telling estimated 5. Yes. And they are telling total estimated is unchanged at 2. 17. Now 10 plus 5 we have accounted. That means they have estimated 2 in the year 3. Yes. Where is the actual cost? Only year 1 they have given. Yes. Only year 1. Here there is no information here. So what maximum we can do? Cost. 9 divided by 19. Yes. Actual plus total. Actual plus estimated. Roughly it will come to 9.85. Yes. So total estimated cost 17, 10 in year 1, 5 in year 2 and 2 million in year 3. This part is correct. But at the end of the first year, the actual cost they have given you. Year 2 they have not given you. Anyway, they are asking year 1. Actual plus estimation is a total. So this divided by this is a percentage. Roughly it will come to 9.85, but we can go with the
If they are asking to recognize what's the recognized revenue year 2, what we have to do.
suppose actual cost in year 2. Very good question. Suppose actual cost is in year 2, let's say $4 million. You should do 9 plus 4, 13. 13 plus 5, 18. 13 divided by 18.
0.72.
If they are
72.
given this 4 also, we have to take only cost 5.
No, here 0. Right now there is no information.
Like if there is no actual cost here,
Hmm.
it's estimated cost we should not take.
As a revenue, no. That's estimation. Projections we cannot. No, I'm assuming. Suppose. Here, what is the percentage? 9 divided by 19, how much?
Divided by 19.47.
0.47 or 47%, correct? Now, year 2, how much? 72 minus 47. Yeah?
20.
In year 2, how much you recognize revenue? 20.8 into 25%, how much? Like that. Make sure that actual costs are cumulative. Estimation don't cumulate. Okay, revenue. Okay. Next, AR. AR, be careful about only one thing. Impact of the transactions. Impact of the journal entries. And how do you calculate uncollectibles, that credit loss expense? What is the impact on percentage of sales method, percentage of AR method when we provide uncollectible credit losses? What will happen to the current asset? Like all those things they will ask you. A specific rate of entries they will ask you. Entries not entries, only impact. Only impact. One minute. Here. Go ahead, then we will go for lease. Lease is very important. Okay, answer this. Percentage of receivable basis. They have already calculated bad debts. Easy. What's the journal entry, man?
6
Allowance, right?
months.
Okay. What happens? They already calculated. And there is a opening balance in allowance. A debit bad debt expense. Wait. Debit bad debt expense. Allowance account will increase now. Yeah, wait. Estimates that it will have a total bad debts in existing. Allowance account has a credit balance of 750. 750 plus 8235, how much?
898.
8985 in this existing receivable balance. Okay. And it will increase. Total bad debts they already have on receivable basis. Anyway, this is not correct. Huh? They already have.
You want to credit 895. 885. For arriving the credit balance of 8,985, you have to credit that. So credit option A is correct.
Because we post the bad debts, no? By bad debts we post, right? Yes? 8235. So 8985. Correct?
So the closing balance will be 898.
85. Allowance account 8985. But how much is a bad debt expense? 8235, right?
8235.
But where is the answer? Strictly speaking, debit 8235, credit 8235 happens, and allowance account will go up to 8985. Yes? So better answer is A. After passing this entry, total allowance is also same and bad debt account is also same. Yeah, because there's no option, no? There's no option.
Because the ending balance is 8985.
8985 allowance account, this is correct. Yes?
Yes.
And here this is wrong. Debit it cannot be. Debit 8985, no. D is wrong. Now, allowance account 8985 is correct. Yes?
Yes.
And allowance 8235 is wrong.
It should be debited.
Debited.
Yes.
Bad debt expense should be 8235. But allowance should be actually 8985, correct?
Yes.
Actually, if that is the case, B is correct. Now, bad debt expense cannot be 7485. It cannot be 7485. Maybe some printing error. Let's go with B then.
But still, if it is coming like that, we should not choose this 8985
bad debt expense. It will not come like that.
Okay.
So, correction. Okay. Now, I'm more interested in with the given time lease. Lease is very, very important. You will get 2 questions on lease. Bonds payable, accounting wise impact they will ask you. Bond valuation, I don't think so. Bond valuation will come in. Yeah, that impact will come. But bond valuation itself will not come. It will come in part 2. Okay, we'll take break. Yeah, we'll take break. We'll finish these important things only I can do in the revision.
Notes receivable, so that we can conclude that it's having disadvantage.
No, don't
Not up
conclude.
to-
Don't conclude. Don't conclude. Anything, don't conclude. It's clear. Sure. Don't conclude. Just telling you. So how do you feel now?
Yes, the questions are right. Hey, 10 minutes ಅಂತ ಹೋಗೋದಾದ್ರೆ ಜಲ್ದಿ ಹೇಳ್ಬೇಕು.
Yeah, come.
ಹಾ.
Hey, Sakri. Come.
ಜಲ್ದಿ ಬಾ.
ಇಲ್ಲಿ ಕಂಫರ್ಟ್ ಇದೆಯಮ್ಮ ಅಲ್ಲ ಕೇಳಿದೆ ಇದೇನೋ ಅಡ್ಡ ಬಂದಿದೆ ಇಲ್ಲ ಅಲ್ಲಿ ಕೊಡ್ತೀಯಾ ಅವ್ರ ಜೊತೆ ಕೊಡ್ತೀಯ ಅಲ್ಲ ಯಾಕೆಂದ್ರೆ ಕನ್ವರ್ಸೇಷನ್ ಸಿಗಲ್ಲ ನೀನೆಲ್ಲ ಹೈಡ್ ಆಗ್ಬಿಟ್ರೆ ಓಕೆ so don't go with my importance but I'm just because within 4 days I want to cover some important things. Next is lease. Today is section A. Tomorrow we'll do section B. Okay. As far as lease is concerned, summary. Lease is of two types, finance lease and operating lease. Finance lease is that which qualifies one of the 5 criteria must be met. What are those 5 criteria?
Ownership transfer.
Ownership transfer.
Purchase 75%.
Yes, 75%. Yes.
Specialized equipment.
Specialized equipment. If one is yes, then it is a finance lease. Otherwise, it is operating lease. In the exam lease, you will get definitely question. That's what I am focusing. Other questions also you will get it. Because 15 questions you will get it. I hardly covered one topic. AR little bit I covered because something related, but AR also you will get a very good questions. Okay. Then the investment is there, inventory is there. So little bit now. Okay. As far as lease is concerned, important is that calculation of lease liability. Lease liability at a present values, right? Discounted value, present value. So the entry and its impact. We debit ROU asset and credit lease liability at present value of lease payments. And in a essay, entire calculation table will be asked, may be asked. Any one of you will get the question. But in multiple choices, what is the lease liability? Or what is the ROU? Okay, that's a common question. And identifying what is this type of lease, what is the type of lease. Okay. How should the lessee classify lease A and lease B? Whether it is operating, whether it is finance. Okay, lease A covers 60% of the expected useful life. No, that is not the criteria, correct? It should be 75%. Just a minute. Home Minister Samajit call is there. Okay. So what is this now? First line, 60% of the expected useful life. No, that isn't correct. You should have a 75%. Present value 81%. No, it should be 90%. Yeah. Owner of the machine retain ownership at the end of the lease. Lease B is 68%. Lease payment is 85%. Lessee has the option to buy. So, option to buy 1 is correct, no?
One, sir.
Hmm.
Yes.
Hmm? But in lease A, I am confused. Owner retains the ownership means it's.
He is having fair market value of 81%.
Owner retains the ownership means he's getting back his asset.
Hmm.
So it is not considered as.
Yeah. So D. D. Operating lease, finance lease. Okay, now next. Go ahead. Yes. In YouTube also, please, you can chat it. Give your answers. You can write in chat box. You can also write here as usual. 6-year lease. Fair value 450. Hmm? Six divided by 10 is 60%, no? That is wrong. Fair value 450. 75,000 into 4 point. Which one? When you calculate it. That means that is less than 90, right? So nothing qualifies. Correct? Operating lease. You calculated, you divided by 450, right? So it is less than 90. Okay. Next. What amount lease liability at the beginning of the lease term? Lease qualifies for a finance lease. 10,000 with first payment due at the end of the year. Interest rate is 12, purchase option 10,000. Estimated value at the date is 20, 14%. But we have to take implicit rate 12%. Correct? 12% factors we have to find out. No, 10,000 into 12% for 10 years. What is the... No, annuity factor. Cumulative.
3.075.
3.70.
3.07.
3.075 into 10,000 how much? 30,750. Yes, plus year 10, 20,000 into present value factor 12%. Equal 10 times. $0.390. 39 into 20,000. 7,800. Something we are taking wrong. Some wrong factors we are taking. Okay, I think somewhere we are going wrong. Check that. We should not take at 14%. That is ruled out. Somewhere factors, Shiva. I think here it is 10,000 only. That 10,000, no? Purchase option is 10,000. Let's see the table. 1 lakh present value is only so much. Okay, 1 minute. 12%. Simple. Yeah, that's what 1 minute. 12%, 10 years. Can you write down? 5.650. Write down 5.650. Okay, 12% 10 years, 5.650. And you also write down this 0.322. 0.322 write down. 0.322. 10,000. Okay, take it. 5 point. That's what we are going wrong.
56,000.
56,502. You see, that factors we took wrong. Okay. Yeah. That is issue into 5.605. 650. So 56,500 plus year 10 and 10,000 into 0.322. 3, 2.
3,
So how much is it?
3,200.
3,200. Yeah.
Times 7.
How much is it? 700. 59,700. I think answer is 59,722. Some people have taken 3 digits like that. 3, 4 digits they might have taken. 59,700.
So for average value, you have to take 10th years.
At the end of 10th year, present value table. Cumulative, 10 years. Okay. Okay. Next, I'm just because I have to finish section A little bit. Let's concentrate on this. Important thing is in investments. Investments, equity securities and debt securities. Equity securities, what is it? 0 to 20%, 20 to 50%, 50 to 100. So 20 to 50% equity method, you will get questions. All the transactions should go through investment in investee account. What is all the transaction? When we invest, and then share of profit and share of dividends. Common questions in the exam will be what is the closing balance, how much the investment increased, decreased. That is common. That is common. And then in case of like for example here, what value will the CAF's investment be carried on balance sheet? Company purchased 30%, right? 30% means that 20 to 50%. They purchased at 550. Then company earned 1 million net income. CAF purchase, right? So we don't want that one of DFG. DFG's net income we need. CAF declared no. DFG declared we need. You invested 550 plus share of income is how much? 100 into 30%. 30. Yeah. Minus dividend 20 into 30%. Yeah. 6, right? Now how much it is total? 580.
574.
574. 574 is the answer. You carry the investment at 574. How much your investment increased? 24. Beginning balance was 550, ending balance was 574, 24. 24, how it came? 30 minus 6. 30 minus 6. No, 30 minus 6. You get dividend out of the share of profits.
Then 20% would be
Dividend would be income. Less than 20% dividend, you treat it as income, your income. Here this is investment equity method. This is the equity. The equity is nothing but like first what we discussed, retained earnings. Retained earnings same, no? Beginning balance plus net income minus dividend, same. Control. Only theory, that consolidation theory, calculation of goodwill. How to calculate goodwill? Purchase consideration minus fair value of the net assets. That also they will not ask. Very easy. But they will ask you in the consolidation process, the theory. Intercompany elimination, APAR, sale purchase, parent company books only realized profit. That there was. So far, I did not get any from anyone. They asked it that also. Theory. Now, as far as debt securities are concerned, trading available for sale, held to maturity. Held to maturity calculations will not be asked in the exam. Amortization and all they will not ask. Did you see any questions? Calculation questions?
No, sir.
No, they will not ask. Out. CPA, yes.
That is same as bonds. Like bonds.
Bonds is just like lease. When you calculate lease and when you amortize, no?
Interest.
Discount amortization will be there. Premium amortization will be there. There is one table we did, no? Enough. That is enough. Why they don't ask that table? Because in lease they are asking similar table. Okay. Disclaimer. ಅಂದ್ರೆ ಕೇಳ್ಬೋದು ಕೇಳಲಿಕ್ಕಿಲ್ಲ. Second time Bala sir ArivuPro not responsible. Don't believe, I'm just touch at base I'm doing. Okay. Yes. So what is the big difference in the accounting treatment? Trading and available for sale. Realized.
Unrealized.
Both are under fair value method. Trading and available for sale. But counter entries, when they are unsold, trading securities unsold is unrealized gains and losses will come in income statement. And also when they are realized, when they sell it, both will come in income statement. But when available for sale securities are unsold, unrealized gains and losses will come in OCI. Realized gains again come in income statement. So basically difference is unrealized gains and losses of trading will come in income statement. Unrealized gains and losses of AFS will come in OCI. Realized once sold. Okay. Okay. Go ahead.
Also, I will do that. Same question. When it is not recoverable by the credit loss, should be
Provided.
for credit loss. That expense, that loss should be recognized in
Income statement.
For our
Just like AR. Okay.
receivables is to
Yes. Yeah. Similarly in AR. Okay. Which of the following statement is correct? For AFS. Just now we talked about it.
Somewhat comparing to all round answers.
Answer, online people. YouTube.
C.
Yeah, C, right? It is neither there nor here.
Between
Neither trading nor HTM. Suddenly you will think OCI, but unrealized. Realized will go to income statement. That's a trap. In exam tension. OCI, OCI, OCI. If you do 10 to 12 questions like this, which you will think it is correct, in fact they are wrong. That's a sorry state. 12 questions, you will move to essay. No problem, you will move to essay. But extremely you should do very good in essay to at least get 360. In essay, 12 sub questions, if you generally 1 or 2 questions, you will write ordinary English, that one, this one. Time is running out. 350. Secret. I'm not disturbing your peace of mind, but that is the next. Inventory. Inventory. Very, very important. All are VIP topics. Because you will get 15, she will get 15, she will get 15 somewhere. Some questions you will discuss when you come back. They will be same. ಏನೇ ಇದು ಬಂದಿತ್ತ that is okay. But all 15 okay. How much is the NRV? Come on. For LC NRV, how much is the NRV? Easy guys. 10 seconds. How to calculate NRV?
T2.
22 NRV. NRV da? Selling price 30, cost to sell is 5. That's it. They are asking what is NRV?
Historical cost. NRV.
No. You are going a step further. That is why you should not reading properly question. Question is what is NRV amma? Ashte 10 seconds 30 minus 5.
So you should not minus 20% of the sales price.
That is for what? Company is using NRV. IFRS, FIFO, weighted average.
Sir, we are confused like net realizable value of each jersey that line drive appraisal should use in lower of
Yeah,
NR.
LCNRV rule. In that, what is NRV? ಸುಮ್ಮನೆ NRV ಕೇಳ್ತಾ ಇದ್ದೆ ನಾನು. NRV is used in LCM also, LCNRV also. Such questions 10 seconds, you should not take more than that. Some questions we got stuck. There you lose 2-3 minutes. This questions next you can think in the exam, just read. They are beautifully asking what is in that. Historical cost is 22. Yeah, you will value at 22. Value at 22 because cost is less than NRV. That is okay. That they are not asking. They are just asking NRV.
Another question. Weighted average cost they have given and NRV there. So they have compared weighted average cost with this. They have taken
Companies who follow FIFO or weighted average, they use LCNRV.
So not only historical cost, weighted average cost.
Historical cost of FIFO, historical cost of weighted average. FIFO, LIFO company, FIFO and weighted average companies use LCNRV. LIFO companies use LC. Historical cost, here they have not written any method also. Maybe it is FIFO, maybe it is weighted average. Historical cost is 22. Amma navya. Tension ಮಾಡ್ಕೋಬಾರ್ದಪ್ಪ. ಟೆನ್ಷನ್ ಮಾಡಿದ್ದ ಇವತ್ತು ಹೆಲ್ಪ್ ಆಗ್ತಾ ಇದೆ ಅಲ್ವಾ? ಓವರ್ ಸ್ಟ್ರೆಸ್ ಮಾಡ್ಕೋಬೇಕು. ಈಸಿ. ಅದು ಏನು ಕೇಳ್ತಾ ಇದ್ದಾನೆ ಆ ಲೈನು ನೀವೆಲ್ಲ ಇದು ಮುಂದೆ ಹೋಗ್ಬಿಟ್ರೆ ಈಗ what is LCM da? You are asking yourself, you are making your life come. Simply they are asking what is NRV. When we use LCNRV method, whether you use LCNRV or LCM, NRV is 25. NRV is also known as ceiling, right?
So for the calculation of NRV, we should not use this profit margin.
No, that is floor. That is for LIFO companies. Okay, to clear your doubt, if we are doing LCM for LIFO, A is what? Historical cost. Now, when they say historical cost, we should say it is LIFO cost. LIFO cost initial 22. I am modifying this, okay? B, market, how much? C, LCM, how much? D, loss, how much? Okay, now market. For market, ceiling or NRV is 25. Yeah, and did they give current replacement cost? Yes. CRC 20 they have given. Yeah, yes. 20% of the sale price into 20%, 6, right?
What is the difference?
Floor 4. 1 minute. NRV 25 minus 6, how much? 90. 20 is market price. LCM is 20. Earlier in your books 22. You need to make 20. Loss is 2. Your question.
What is the difference between replacement cost?
Replacement cost and
Market
where they have written here?
20. And so
Current replacement cost is 20 CRC. If I replace this one, okay, I'll get 20. Replace.
NRV.
NRV is if I make this ready to sell.
If you're selling this, you will be getting 20.
20, but to get 20, I have to spend 5. Okay. No, to get 30.
But 30.
To get 30, I have to spend 5. 25. 25 is NRV. If I just replace this with the old model, CRC is 20.
So if you're buying a new mobile, it is 25.
25. If I exchange this and get the old one or refurbished, 20. Very, very bottom, I'll get 19. Understood? Now, what is bottom? Floor. How to calculate? 25 minus profit margin. I am expecting profit of 6, but I am not going to get 6. Minimum 19 I'll get. Now, what is the market dollars? In between all those things, 20. I told you, write in ascending order, descending order, and select the middle one. This is, I just modified this question for LCM. One advantage of periodic inventory. Yes. Less record keeping. Hmm. Ten seconds. 10 seconds. 51, that's it. 55 minus 4. That's it. Okay. LCNRV 40. Right?
Yes.
Historical 40. NRV is 51. And we value at 40. No loss. 40, 40. Okay, this is lease. Next important. Tangible assets. How they are valued? Property, plant and equipment. How they are valued?
That's the real value.
Property, plant and equipment measured at.
Initial cost minus.
Initial cost minus accumulated depreciation minus impairment loss. It is called the carrying value or book value after capitalizing the cost. Okay. Now in this question, what they're asking? depreciation methods you already said. If the company uses units of production method, what is the accumulated depreciation in year 2? Shali, come on. $300 plus 1,200, 1,500 plus 900, 2,400 plus 600, 3,000. So depreciation 10%, 8,400. Accumulated depreciation 8,400. Yeah. Year 2. 1,200 divided by 3,000. How much? Huh? 3,600 plus 8,400.
12,000.
Sir, 1200 divided by 3,000 is 0.4 into 8. 33,600.
33,600.
32,600.
33.
33,600.
32.
Plus 8,400. This 8,400 is correct? Huh?
It's right. That's
Okay. Can you add 33,600 plus 8,400?
42.
accumulated depreciation. I've told like this. Second year's depreciation. That they asked.
Accumulated depreciation, dear. Not depreciation. This is depreciation for year 2. Understanding. Tanishka. Okay. Now carrying value. Can you all take the calculator? 84,000 minus 8,400. 8,400.
75,600.
Then 84 minus 42. 42, right?
Yes, sir.
So even carrying value is 42. year 2. Oh, sorry. Carrying value is not like this. So original cost, right? 90,000 minus 8,400. 90,000 minus 80. Huh? 81,600. 90,000 minus 42. 48,000. See? 48,000 is the carrying value for year 2. Depreciation year 2. Carrying value year 2. Accumulated depreciation year 2. All options are there.
Second year,
Hmm.
2,900.
Not more than 4,000.
Now we are putting ಭಾಳ ಟೆನ್ಷನ್ ಮಾಡ್ಕೊತಾ ಇದೆಯಲ್ಲ ಯಾಕೆ ತುಂಬ ಸ್ಟ್ರೆಸ್ ಆಗಿದೆಯಲ್ಲ ನಾನು ಕನ್ಫ್ಯೂಸ್ ಮಾಡ್ತಾ ಇದ್ದೀನ ನಾನು ಬರಬಾರ್ದಾಗಿತ್ತಾ ಹೇಗೆ ಅಲ್ಲ ಈಸ್ ದಿಸ್ ಹೆಲ್ಪಿಂಗ್ ಯು ಆರ್ ನಾಟ್ Anishka, Vishnu, Nishant, Varuni, and others on YouTube. YouTube guys. Shiva said he likes Balasar B. B is also bad. What are the 2 steps to determine impairment? Huh?
Yes.
Very good, Vaishali. Step 1, recoverability test. Huh? Catastrophic natural disasters. Recoverability test, how do we do? Compare.
Discounted cash flow.
Cost to sell.
Non-discounted cash.
Cost to sell.
Undiscounted cash flows from the
Compare carrying value to undiscounted cash flow. If carrying value is more than undiscounted cash flow, then we'll go to next step. That means recoverability test failed. That means carrying value is more. That means it is not recoverable. And what is the rule? We should not carry higher assets. Higher assets we should not. That is why we go and do impairment. Carrying value minus fair value. Which of the following is not an example of what would cause impairment? What are the two circumstances? To start, which is not physical condition, yes. Adverse change, yeah. Market value less. This is also correct. This is also correct. Yeah. This is not.
Sir, can you explain option D?
If we dispose before the end of the year, we don't get any money. Sell. If we sell right now, it will not fetch me too much.
So at the time we have to.
Yeah, two conditions, no? Basically, two conditions. Physical condition is so damaged. Market value significantly reduced. Okay. What will be the book value? Sum of the year's digit. $300 minus 20, right? 380. Sorry. 280 into SYD fraction. 3, right? 3 plus 2 plus 1. How many years?
4 plus 3 plus
Okay. 4 plus 3 plus 10, right? Here we start with the 4 by 10. So how much depreciation?
1,12,000.
112. Accumulated depreciation 112. Carrying value 300 minus 112.
188.
188. Next 280 into 3 by 10.
84.
84. 84 plus 112.
186.
300 minus 196.
104.
Vaishalish, you again. You are telling depreciation. They're asking book value. Sri.
So they're taking too much time, sir. I'm just calculating that.
ಅದು ತಗೋಬಾರ್ದಮ್ಮ. ಈಗ ಆಯ್ತಿದೆ, ಟೈಮ್ ಎಲ್ಲ ಆಯ್ತು. ನಾವು ಆಲ್ ದೀಸ್ ಥಿಂಗ್ಸ್ ಯು ಫಿನಿಶ್ಡ್. ಯುವರ್ ಹಿಂಗೆ ಹೋಗ್ತಾ ಇದ್ದೀರಾ ಎಕ್ಸಾಮ್ಗೆ. I'm not scaring. I'm not scaring. Okay, I have another 5 minutes. Impairment loss, how much?
The notes were answered. So, sir, 35,000, sir. 35. Accumulated 60, sir. 60, sir. Sir, 60. Minus 25. 25. Take credit or don't take 45,000. Take 45.
I thought
How much you said? How much you said? 20.
15. We take estimated.
He took estimated machine minus the 45.
Estimated 40.
Wait. 45 minus 25.
No, sir,
instead
I
of
took difference
60,000,
value.
I took discounted tax.
That's what I 45 minus 20.
Starting the bit will become the highest and then it will become below.
Initial years, high depreciation, low profit.
About depreciation.
No other comments. 8 years SYD. 8 plus 7 plus how much is
36, 36. 24, 24.
24, 24, 120 minus 24, 96.
96.
Next year,
Twenty-one, sir.
plus 24,
25,
minus 120,
25.
45 minus accumulated depreciation. 45 minus 27. 45 in year 2 in SYD, 27 in year 2 SLM.
18.
45 minus 27, 18 greater than straight line. Okay. Bye bye. Enjoy. Tomorrow I'll see you.